Dr. Jeffrey Scott here, and this is a market review for November 11th, Veterans Day 2024. Thanks to all the veterans. This review will be done using the trading app, as today I'm going to do 3 reviews, one with WealthCharts, one with TradeStation, one with the trading app, so you could see the similarities and then some of the differences between the platforms. As always, these are for educational purposes only. Any recommendations be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis, how I apply them. Trading involves risk. You will are solely responsible for any investment decisions you make. I may own or intend to sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should consult with your financial advisor before making trades. And I have tools for multiple platforms, but am an independent trader. All right, so let me end that slideshow. Okay, so let's go into the timing model. And this was another interesting day in the U.S. markets. Now, the interesting thing here is which one of these is unlike the others. And that's the Russell. And we'll see when we get to the performance view that the Russell, here the IWM, the Russell 2000 outperformed. You can see on the weekly charts we're creeping up on the 3-month or 13-week new high, new low, getting to areas where you'd expect a reversal. In green, we wouldn't expect a change until Friday. We still are in a long-term buy signal on each of the 4 ETFs, although we do see a reversal here intraday on the diamonds, and we see kind of not much movement in the spider and the Qs. In fact, if we look at the daily charts, and very quickly I look at my signals line down here, I can see that they're all still in a buy mode, but you could see Monday in the S&P, the spiders traded high, but failed at the high of Friday's bar and closed below where it opened for a red candle. Similar pattern occurred on the Qs. The diamonds opened, traded higher, and closed lower. Still a bullish day, a positive day for the diamonds, but kind of feels like a shooting star. And then the champion, still another bullish candle in the session, is the Russell. Just notice on the daily, again, how the 13-week or 3-month new high, new lows are starting to get to areas that might be concerning. If I look at the market briefing page and start with performance view and rank them by one-day close, you could see the champion was the Russell up 1.5, the diamonds up 0.66, the spiders up 0.1, and the Qs down a few pennies. Volatility was down on the session. We can see over here that the diamonds closed in the lower part of the range, the rest were at the higher part, and the strength for that being the VIX bad, and the Russell continues strong. Still have predominantly new high, new lows in big numbers on the NYSE and on the NASDAQ. Up here, let me shut this for a second for reducing the desire to look there as well. We look at one day, we can see discretionary, financial services, industrials led the market. And if I look at what was weak on a one day, I can see real estate, healthcare, and interesting technology, which has been super strong. I could also look at category themes, which are different themes in the market. We have 47 of them, and leading data sharing, lithium batteries had a big rebound, fintech, telemedicine, cloud computing, tech software, cybersecurity. So still a tech-heavy leadership. If we look at the laggards on the session, cannabis continues to get clobbered. It's now down 43% over 5 days. Gold, silver down, semiconductors, profit-taking, copper down, uranium down, but still heavy tech-driven leadership. Over here at the right, I asked 4 questions on the S&P 1500, the NYSE, and the NASDAQ. Question number 1, what percentage of the sectors were positive? 82% on the S&P 1500, 83 on the NYSE, and 75 on the NASDAQ. And you could see how they compare to the gray bar of the prior session. What percent of industries? 74% of industries, 70% of industries, and 66. So the majority of industries were up. How many stocks, what percent of stocks were up? 69, 60, and 59. So, better than a 50-50 day on these. And then above the midline, 74%, 63, and 62. That tells me that this was a strong day in the market. Majority of sectors were up, most of the industry groups. Over half the stocks were up, and the stocks are remaining in the upper half of their Bollinger Bands, which is where more bullish. If I look at buckets, not just looking at the S&P 1500, but actually looking at multiple indices, we are clearly shifted to the right, which is a bullish condition. We are 16, 17 above on the NYSE, 16, 17 on the NASDAQ, 20% above on the S&P 1500, and 23% on the Russell 1000. Those are really extended names. We are going to have a short-term top soon, in my opinion. When I look at the 3-month, 13-week new high, new low, when I look at my buckets, it doesn't mean we have to have a big correction. We might just see some sideways movement to work out some of this overzealousness to the upside since the election. We are extended, and you can see that in the buckets. If I look at the breadth view, get a sense of some of the new high, new lows, up, down volume, advances, decliners. And you could see here, and then the stocks above the various 200-day in red, 50 in white, 17-day in green. We are getting extended on all these metrics. Look at the greatness down here. We had a Bango, which is an exuberant signal fired today in the NYSE. We've had 3 Bangos in the last 3 bars on the NASDAQ, just sign of an exuberant market. I go into the ratios to see what's leading. I look for things at the top. There's no question that discretionary is on fire. Industrials is on fire. Bitcoin is burning up the place, but that's not an S&P sector. Financials looks good too. So industrials, financials, communications, discretionary. Technology, not so much, because I think of the weakness in the semiconductors. You want to see weakness, look at staples, look at healthcare, for the most part, utilities and real estate. So the defensive plays. Now you ask, but Jeff, most of the sectors were up. How come those look so bad? These are ratio charts. This shows compared to the spiders, they underperformed. It doesn't mean they were up or they were down. It's compared to the spiders. All right, so we should have a sense in the market. We've got a number of signs that should worry us that we might be stalling out here. And after the move we've had, that would not be a big surprise. However, considering the awesome seasonality of November and the sentiment, it could go higher. But remember, we got a CPI, PPI, and some jobless stuff coming this week that could certainly derail. And at some point, that rising dollar is something that we may want to be looking out for. Let's take a look at the JAS layout. When I say rising dollar, let me just show you the if it's going to show up here or not. UUP is Invesco dollar, and you can see how the dollar has really broken out here. Now, a reversal candle perhaps in the dollar, maybe you'll get an island reversal. If this came down, that would be very supportive of the markets. Now, I'm a top-down guy. I look at my JAS group, which you'll see open up in a second underneath. It should show 3,300. Let's see how many they have today. It's NYSE plus the NASDAQ with a $1 and 100,000 shares. 3367. I'm a top-down guy, so I go the top-down line, and I have all the sectors here. I can rank them by change, percent change. I like to rank them by my momentum, specifically my short-term momentum. Financial services, industrials, and your consumer cyclical, which is the discretionary, are what led on the session. Now I could drill down to financial services, and you'll see there's 17 industry groups in financial services. There's 3367 in stocks. I could rank the stocks by short-term momentum, and the same one that we showed yesterday, Sezzle, because it's including the last couple of bars. Not a whole lot in this session. MicroStrategy, wow. It's a Bitcoin play, and there are a number of Bitcoin stocks and miners that looked good in this market. So that's one way of looking at it. Now I could rank the industry groups. I go back here. All right, so we're out of that. Now we're looking at everything. Financials alone, I'd have to stay here. And there's your 17. And it's not 3367 if I leave it on financials. It's 434. If I look at the leading financials, it was credit services. And there's your Sezzle, Upstart we talked about over the weekend. No surprise, it gave up some. Bank One, or Capital One rather, has looked good, was higher. Discover Financial Services, MasterCard. So a number of these we talked about over the weekend. Asset management, global asset management. Only one that it showed there. All right, so that means let's look at asset management down here. Combine them. And let's do short-term momentum. DXYZ, don't know anything about this, but this is one that we looked at over the weekend. BlackRock, America, Shooting Star, maybe that should be concerning. Ameriprise, AMP, consolidating after a massive breakout. The one that I own is KKKR, and it's been a great performer. It's extended. I certainly wouldn't be buying more here. Now, click those off, turn those off. So when I first went into this page, I had ranked my sectors. I have the industry groups, but since nothing is highlighted, we've got 3367 and all the industry groups in the market. Over the weekend, one of the things we talked about was aerospace and defense. So let's just take a look at those. Look at some of the moves today. Axon, right? The old taser. It can't get any higher, can it? Well, it did. It was up another 12 points. TradeStation, this thing pops up all the time. And the problem with it, it's hard to buy a lot of a $1,374 stock. Lockheed Martin, I think we talked about this over the weekend. It's got to get above the 50. Don't like that shooting star. LHX was one of the ones that we liked over the weekend, and it continued to go higher. So I think that this is just a great way of breaking down the markets from a top-down perspective. Now let's go back into the impulse view where we will have the 3367. Now I can rank these stocks by short-term momentum. Sezzle, Axon, MicroStrategy, Coin, another derivative of Bitcoin. Wow, what a move. Now, I'm not that smart. The one that I loaded up on probably looks similar at much lower dollar value, which is Hood. And I loaded up on it as one of the derivatives that goes up when Bitcoin does well. And you can see a similar pattern at a much lower dollar value. Tesla continues to go higher post-elections, starting to look a little frothy with 100%. So I could rank the entire market by this momentum, but what I really like to do is use my filters. So let's go into the filters. Let's kill anything that's less than 500,000 shares. That brings us down to 2169. I want price greater than 5. Brings me down to 2160. Let's see, come on. Brings it down to 1847. And let's look at K-Force 2-day, which is one of my favorite scans. And these are the stocks that made it. Starbucks finally got back above 100. Consolidation and a breakout. Look at the dots here, coming out of a squeeze, breakout, momentum, volume, new EMS signal, CPR yesterday. The green things here tell me that their OBV and their relative strength are beating, have broken above their moving averages. That looks great. Rumble. Don't know much about this, but breaking out. BKH, Black Hills Corporation. pullback, breakout, Rivian, kind of moving off the bottom, and then PCG. Sorry if you hear background noise. People like talking when I'm doing this. PG&E, PC&E, Corporation Utility, a beautiful breakout here. Now let's say I was curious about fundamentals here. I dropped this, and we're going to build out a whole thing like we've got in TradingView, but we can see right here, earnings surprises significant, although not so much on the revenue. The other thing is we do have the ability to jump into TradingView and should open up with this ticker. And then my little fundamental picture is going to pop up here, and I've got it massively increased. And you could see earnings per share change, revenue change, surprises. Next earnings are December 20th. Dividend, just a penny, meaningless. And you can get some of the fundamental values as well. So hope you like this quick tour with the Market MRI Pro app by Praveen. And you'll compare this to what we did in TradeStation and what we did in WealthCharts, and you could see how the flow varies by the programs. Thanks.